All right, let's get right to it here. I mean, 9 board seats, that's a lot. I mean, most people come to the table with maybe 1 or 2. Why 9? And more importantly, if you get them or even get half of them, what do you expect?
Yeah, sure. So, I think 9 is really driven by the company's size or the existing incumbent directors. There are 14. So to gain a majority of the board, we need to nominate at least 8. So our expectation is really that for whatever reason, management and the board have not sincerely engaged with us to date. And the only way that we can ensure that we unlock the value for our sizable economic position that we have and for other shareholders is by turning over that slate.
So you turn over that slate. I mean, what's the elevator pitch for what you do after that? What unlocks that value?
Explore strategic alternatives. Like, obviously, our preference as, an interested buyer is that they sell to us. But our expectation, of course, is that they should run a process to determine what is in the best interest of all shareholders. My strongly held view is I think we have a very strong group assembled to buy this company at a very big premium, and I think we stand the chance to win.
A very big premium, but what do you do with it then? I mean, or let me rephrase that. What do you do differently than what the current management is doing right now?
Well, we could definitely speak to that a bit. I think it's important for shareholders to know that they don't need to worry, because once we close, it's out of their hands. They've taken that profit and gone on to invest in other things. That said, it's of no surprise to you, Romain, I'm sure, that the company, and you referenced it moments earlier, the company holds a substantial amount of real estate on balance sheet that the company has just done an abysmal job at realizing on behalf of shareholders.
There's more to be had of this real estate play here, but we've been talking so much about Macy's pushback as well. How much of the company do you currently own? How much stake have you amassed, and how much power does that give you in winning these board seats?
So we have a 4.4% economic exposure to the company right now, and our strong beseechment to other shareholders, and we've gotten very positive unsolicited inbound so far, is to reach out to management as we have and implore them to provide us diligence and engage with us to at least determine if there's a deal to be had for the benefit of all shareholders.
At $5.8 billion or more than that?
Right.
So $5.8 billion represents the equity portion of the transaction. In other words, the market cap plus premium. But there's also debt on balance sheet of the company. So far we've offered $21 a share. We've stated very explicitly to both publicly and to the company privately on numerous occasions that we have a lot of conviction and optimism that we can increase our offer if we're given even just limited diligence, and the company's been resistant to providing even that.
That was going to be my next question. You've said that you could increase this offer. At what point would you increase it, and how much would you increase it by?
Listen, we're hopeful that we can, and that we will, but we need diligence. There's just there's only so much we know definitively about the company's assets. There's opacity into specific things that we need as buyer to figure out exactly how much we can pay.
What?
We don't even know store-by-store profitability, right? We're guessing at that. We don't know tax basis on the real estate. We don't have any other relevant, information on performance that's absolutely critical to crossing our T's and dotting our I's.
What is the plan there to then maybe close some stores moving forward? Is the idea here to sell some of the real estate and get out of some of the existing locations?
Yeah, certainly. I think there's some of that should and probably will be executed on. But in our view, this is really a Macy's forward plan. In other words, they own 100 million square feet of real estate. That real estate is incredibly valuable, largely because it's occupied by a great retailer. A retailer, nonetheless, and a department store. And of course, they face plenty of headwinds, like every other department store. But we think that they should be the most resilient of the bunch and the one that lasts the longest, but are fearful that they won't in the public domain.
But that real estate has been a ballast for the company, particularly given how much the retail the core retail business has struggled in recent years. And I know there's some questions, at least as a public company, that if you were to separate those, what does that leave investors? And I know taking it private, that's a whole different dynamic. But there is a broader question, and you understand. I mean, Macy's is more than just Macy's. It is probably one of the ultimate brand names. It is so identifiable.
Yeah.
And anything you do with it is going to come under a tremendous amount of scrutiny, whether it's from a Wall Street perspective or just from that sort of from the heart consumer perspective.
Yeah, absolutely.
Yeah.
I entirely agree with you.
Yeah.
And we are not specifically advocating for a spin-off of the real estate.
Yeah.
Though I would say that holding real estate on balance sheet, especially when you only have one director with any real estate track record, and by the way, that's not from us, that's from the company's own own perspective in terms of strengths of their director candidates, of their incumbent directors, is a bad idea. It's a bad idea to own real estate and to try and manage and asset manage and profit from real estate when you're not a real estate investor.